Preparing for a securities financing operations interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does a securities financing operations team do? Securities financing operations sits between trading, counterparties, custodians, and control functions. My job is to make repos and securities lending trades settle accurately, collateral move correctly, and lifecycle events get processed on time. That means validating trade economics, monitoring settlement, resolving breaks, managing margin calls, and escalating risk. Good operations protects funding, liquidity, and client relationships, because small booking or collateral errors can quickly become exposure issues. While answering, focus on the team's position between trading, settlement, collateral, risk, and clients. Cover trade support, lifecycle events, reconciliations, margin, fails management, and operational risk control. Question 2. Explain the difference between a repo and a reverse repo. Repo is a collateralized cash borrowing transaction. One party sells securities and agrees to repurchase them later at a higher price. Reverse repo is the opposite side, where I lend cash and receive securities as collateral. Economically, both are secured funding trades. In operations, I focus on start and end legs, repo rate, collateral eligibility, haircuts, income treatment, settlement instructions, and whether the trade is bilateral or triparty. Make sure to cover the economic perspective, cash borrower versus cash lender, securities as collateral, start and close legs, repo rate, and why terminology changes depending on the booking side. Question 3. How is securities lending different from repo? The key difference is motivation. In securities lending, the borrower usually meets a specific security, often to cover short sales or settlement obligations, and pays a lending fee. In repo, the main driver is funding against collateral. Securities lending can involve cash or non-cash collateral, while repo is typically cash against securities. Operationally, I watch recalls, returns, manufactured dividends, collateral substitutions, and fee accruals more closely on stock loan activity. In your answer, talk about the primary motivation, ownership and collateral flow, lending fee versus repo interest, borrower needs, cash or non-cash collateral, and operational lifecycle differences. Question 4. Walk me through the life cycle of a repo trade from execution to maturity. Once the trader executes a repo, operations validates the economics, counterparty, security, cash amount, repo rate, start date, maturity, haircut, and settlement details. The trade is booked, matched, and instructed to the custodian or triparty agent. During the trade, we monitor settlement, collateral value, margin calls, interest accruals, and substitutions. On maturity, the close leg settles, cash and securities return, and any breaks are reconciled before the position is fully closed. Be sure to mention trade capture, affirmation, settlement instruction, collateral allocation, margining, interest accrual, substitution if applicable, maturity processing, reconciliations, and exception escalation. Question 5. What are haircuts, and why are they important in securities financing? A haircut is the discount applied to collateral value to protect the cash lender. If a bond is worth 100 and the haircut is 2%, the lender may advance only 98 in cash. That cushion helps absorb price moves if the borrower defaults and collateral must be sold. Haircuts vary by asset class, liquidity, credit quality, maturity, and counterparty. From an operations view, applying the wrong haircut creates immediate exposure and margin breaks. While answering, focus on haircut as over-collateralization, protection against market moves and liquidity risk, impact on cash proceeds, margin exposure, collateral quality, and counterparty risk. Question 6. How would you handle a repo trade that fails to settle on start date? First, I would identify whether the fail is cash, securities, instruction, inventory, or counterparty related. I would check trade details, settlement status, SSI, custodian messages, and available positions. Then contact the counterparty or agent for matching information. If the fail creates funding or market exposure, I would escalate to the desk, treasury, and risk. I would track the fail daily, agree next steps, and document the root cause to prevent recurrence. Make sure to cover immediate investigation, checking instructions and inventory, contacting counterparties and custodians, assessing funding impact, escalating material exposure, documenting actions, and resolving root cause. Question 7. What is a margin call in securities financing, and how is it processed? A margin call happens when collateral value no longer sufficiently covers exposure after market moves, accrued interest, or corporate actions. The operations team calculates exposure based on agreed pricing, haircuts, thresholds, and minimum transfer amounts. If additional collateral is required, we issue or receive a call, agree it with the counterparty, and instruct cash or securities movement. If there is a dispute, we compare prices, positions, and agreement terms until the break is resolved. In your answer, discuss daily mark-to-market, exposure calculation, thresholds, collateral movements, dispute handling, deadlines, agreement terms, and the importance of timely communication with counterparties. Question 8. What is the difference between bilateral and triparty repo? In a bilateral repo, the two counterparties manage trade settlement, collateral selection, margining, and substitutions directly. In triparty repo, a triparty agent, usually a custodian bank, manages collateral allocation, valuation, eligibility checks, and settlement mechanics between the parties. Triparty reduces operational burden and improves collateral efficiency, but operations still must monitor exposure, eligibility, trade terms, reports, and exceptions. The agent helps process flows. It does not remove counterparty or documentation risk. Be sure to mention operational responsibility, collateral management model, role of the triparty agent, settlement efficiency, collateral eligibility schedules, substitutions, reporting, and residual risks. Question 9. How do corporate actions affect securities lending and repo trades? Corporate actions can materially affect open financing trades because the legal holder and economic owner may differ. For example, if a lent equity pays a dividend, the lender usually receives a manufactured dividend from the borrower. For bonds, coupon payments must be tracked and passed through correctly. Operations must monitor record dates, recalls, substitutions, tax treatment, and entitlement reconciliations. Missing a corporate action can cause client compensation issues, counterparty disputes, and profit and loss breaks. While answering, focus on manufactured income, dividends, coupons, recalls, substitutions, entitlement tracking, tax considerations, borrower obligations, and reconciliation between custody, trading, and counterparty records. Question 10. What controls would you use to reduce settlement and reconciliation risk? I would rely on strong preventive and detective controls. Preventive controls include complete trade capture, SSI validation, maker-checker review, counterparty matching, and system tolerance checks before settlement. Detective controls include daily position, cash, collateral, and accrual reconciliations against custodians, agents, and counterparties. Breaks should be aged, assigned to owners, and escalated based on materiality. I would also track KPIs such as fail rates, unresolved breaks, margin disputes, and late settlement instructions. Make sure to cover maker-checker controls, trade matching, SSI validation, daily reconciliations, exception aging, break ownership, escalation procedures, system controls, and metrics used to monitor operational performance. Question 11. How are fees and interest calculated in securities financing transactions? Repo economics are usually driven by cash amount, repo rate, day count convention, and the number of days outstanding. Securities lending may involve a lending fee for non-cash collateral or a rebate arrangement when cash collateral is posted. Operations validates the rate, accrual basis, value dates, and billing period, then reconciles income or expense with counterparties. Accuracy matters because small rate or day count errors across large balances can create meaningful profit and loss differences. In your answer, talk about repo interest, lending fees, rebate rates, day count conventions, accrual periods, cash versus non-cash collateral, billing cycles, and reconciliation to counterparties. Question 12. What would you do if your collateral valuation disagrees with the counterparty's valuation. I would first break the difference into components: security price, accrued interest, FX rate, quantity, haircut, or timing. Then I would compare our marks against the agreed pricing source in the legal agreement or operating procedures. If the counterparty used a different price or haircut, I would share evidence and request support for their calculation. Material disputes should be logged, escalated, and monitored until resolved, because unresolved valuation breaks can delay margin movements and increase exposure. Be sure to mention comparing pricing sources, positions, haircuts, FX rates, accrued interest, eligibility rules, timing differences, documentation terms, dispute logging, escalation, and temporary risk mitigation. Question 13. Why are recalls important in securities lending operations? Recalls are important because the lender may need the security back to settle a sale, participate in voting, or reduce exposure. Once a recall is issued, the borrower must return the security within the agreed timeframe. Operations must notify the borrower, track acknowledgement, monitor settlement, and escalate delays. If the borrower cannot return the shares, the lender may face settlement fails or buy-in costs, so recall management is both client service and risk control. While answering, focus on lender need to sell or vote securities, borrower obligation to return, recall deadlines, settlement risk, buy-in exposure, communication, and tracking through closure. Question 14. What is SFTR reporting, and why does it matter for operations? SFTR is the European regulation requiring detailed reporting of securities financing transactions, such as repos, securities lending, buy-sellbacks, and margin lending. Operations plays a major role because the reports depend on accurate trade economics, collateral data, lifecycle events, counterparty identifiers, timestamps, and unique transaction identifiers. Poor recording creates regulatory risk, even if the trade settles correctly. A strong process reconciles reported data, resolves pairing and matching breaks, and fixes root causes quickly. Make sure to cover Securities Financing Transactions Regulation, reportable trade types, unique transaction identifiers, lifecycle reporting, match-in fields, data quality, regulatory deadlines, and consequences of reporting errors. Question 15. If a trader asks you to prioritize several urgent breaks, how would you decide what to handle first? I would prioritize by risk, not just by who shouts loudest. Same-day settlement issues, large cash movements, client-facing fails, margin exposure, regulatory deadlines, and aging breaks come first. I would quickly assess materiality, deadline, counterparty dependency, and whether the issue blocks funding or trading activity. Then I would communicate the priority order to the trader and manager, work the highest risk item, and keep a clear audit trail of actions and escalation. In your answer, discuss risk-based prioritization, settlement deadlines, cash impact, client impact, regulatory reporting, market exposure, aging, escalation, clear communication, and balancing trader urgency with controlled discipline. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.